Hope you'll be fine. First of all, like and subscribe my channel and press the bell icon for a new video. So today topic is self-employed health insurance deduction to guide 2025. Navigating the complexity of tax deduction can be daunting, and especially for self-employed individuals striving to manage their health insurance expenses. However, understanding and maximizing the self-employed health insurance deduction is critical for reducing taxable income and enhancing saving. This comprehensive guide aim to empower you with the knowledge to make the most of these tax benefit in 2025 and ensuring you can focus on what truly matters and your business and well-being. Key takeaways: eligibility criteria determine if you qualify for the self-employed health insurance deduction based on your business structure and income, and deductible premium identify which health insurance premium are deductible, including those for medical, dental, vision, and qualified long-term care. And limitations are consideration. Understand the limitations such as the prohibition against travel benefit and the impact of the subsidies to ensure accurate deduction. Understanding the self-employed health insurance deduction. As this self-employed individual, you have the opportunity to deduct health insurance premium paid for yourself, your spouse, dependents, and any children under age 27 at the end of the tax year. This deduction and is an adjustment to income, reducing your adjust gross home and income and consistently your overall low tax liability. It's important to note that this deduction applies only to premium not compensated by insurance or other means. Eligibility criteria: to qualify for the deduction, you must meet specific criteria. Self-employed and the status: you should be self-employed with a net profit reported on the schedule and our schedule F. Alternatively, partner with net 2% shareholder in an S corporation with always works, and we too may qualify. Established point: the health insurance plan must be established under your business. For solo and the proprietor, the policy can be in your name or the business name. For partner, the policy can be in you and report the premium as guaranteed payment. For S corporation shareholder, the policy and can be in the corporation on your name, and with the corporation reimbursing you and reporting the premier as wage. No other coverage. You and your spouse, if applicable, must not be eligible to participate in a sustained health plan for another employer during the month you earn in the deduction. And deductible premier: the deduction encompasses and premiums paid for various types of health coverage. Medical insurance premium for traditional health insurance policies covering medical care, and dental and vision insurance premium for dental and vision policies. Qualified long-term care insurance premium for qualified long-term care insurance, and subject to age-based limit for 2025. The deductible limit as follows: age 40 or younger for 70, age 40 to 50, and age 51 to 60, and 61 to 70, 71 to the older. Limitation and the consideration: while the self-employed health insurance reduction offers the sustainable to benefit, it is critical to navigate this limitation with the precision to ensure compliance and maximize and your saving potential. Understanding these nuances can help you avoid common pitfalls and make informed financial decisions. No double benefit: the IRS prohibits claiming the same health insurance premium at reduction in multiple places. Specifically, you cannot deduct premiums to Schedule 1 from 1040 if you also claim them as an entire deduction to Schedule a form, which could be led to discrepancies during an audit. To maintain accuracy and carefully to where each deduction is applied, and consult with our tax and the tax professional if you are unsure. Income limitation: the self-employed health insurance deduction is covered by your earned income from the business under which the insurance plan is established. This means that if you have and your business experience are low or donate minimum profit, your ability $5,000 in a year, but your health insurance premium and the 6,000, you can only deduct up to the 5,000. This limitation underscores the importance of strategic financial planning, and especially in year when business income and the fluctuates. And premium tax credit coordinators and coordination: if you purchase health insurance through the health insurance marketplace and receive a premium tax credit, it is essential to coordinate to credit and with your deduction. The deductible account must be reduced by amount of the premium tax credit you receive. And for example, if your total premiums over the $10,000 and you receive $3,000 premium tax credit, you claiming deduction which could lead to the penalty. Utilizing IRS from the 8962 can help reconcile your premium tax credit. Premier identify which health insurance premium are deductible, including those for medical, dental, vision, and qualified long-term care. And limitations are consideration. Understand the limitations such as the prohibition against double benefit and the impact of the subsidies to ensure accurate deduction. Understanding the self-employed health insurance deduction. As the self-employed individual, you have the opportunity to deduct health insurance premium paid for yourself, your spouse, dependents, and any children under age 27 at the end of the tax year. This deduction and is an adjustment to income, reducing your adjust gross home and income and consistently your overall low tax liability. It's important to note that this deduction applies only to premium not compensated by insurance or other means. Eligibility criteria to qualify for the deduction: you must meet specific criteria. Self-employed and the status: you should be self-employed with a net profit reported on the schedule and our schedule F. Alternatively, partner with net 2% shareholder in an S corporation with always works and we too may qualify. Established point: the health insurance plan must be established under your business for solo and the proprietor. The policy can be in your name or the business name. For partner, the policy can be in you and report the premium as guaranteed payment. For S corporation shareholder, the policy and can be in the corporation on your name and with the corporation reimbursing you and reporting the premier as wage. No other coverage. You and your spouse, if applicable, must not be eligible to participate in a sustained side with any advance payment received and ensuring accuracy in your tax filing. Practical step to maximize your deduction: to ensure you are leveraging the staff and employed health insurance deduction is its fullest potential. Follow the practical step. Maintain an accurate record, keeping detail and records of all health insurance premium payment, including receipts, invoices, and payment confirmation, and organized documentation will simplify process of claiming deduction and support your claim in case of the IRS audit. Imagine the peace of mind knowing that every detail is accounted for, allowing you to focus on growing your business. Plan for income fluctuation: since the deduction is limited by your earned income from the business plans, your premium payments align with profitable month of your and the year. If your income is the inconsistent, consider adjusting your health insurance and plan contribution to maximize your deduction during high earning period. This strategic planning can provide a sense of control and stability in the managing your and the managing your finance. Upper stand coordination with premium tax credit: if you receive a premium tax through the health insurance marketplace and calculate the credit first and deduct the reduced amount of premium after accounting for the tax credit using IRS from 8962. Reconcile your premium tax credit with the advance credit received. This careful coordination and ensures you are not leaving money on the table. Use qualified tax software to as a professional. Consider using tax for software tailored by self-employed and individual to help ensure accurate calculation. Alternatively, consult to tax professional who understand the and manage of the self-employed deduction to ensure you comply with IRS regulation with optimizing and the deduction. These invest in expertise and can some you have and stats, allowing you to the focus on what you do the best and explore group health plan. If you are a member of a professional organization, consider group health plans. They may offer these plans often provide comprehensive coverage at the competitive rate, which can further reduce your expense. Joining some such plans can also provide a sense of the community and shared purpose with the fellow question. As a business expands, that allow you to the deduct premium for and the from adjusted gross income and which can reduce your tax bill or increase your refund. How to find the best health insurance for the self-employed methodology: we analyze 84 data points about coverage and quality for some large health insurance company. To determine the best health insurance company, our ratings are based on complaints made to state insurance department. We use complaint data from the National Association of Insurance Commission, plain rating from the National Committee for Quality Assurance. The National Committee for Quality Assurance is an independent non-profit organization that accredits health plan and produces rating based on specific metrics including patient experience, prevention, treatment, overall rating of the health plan, and directing of care. We collected rating of each company rated plan and devised an average for the company. Average similar plan deductible. The deductible how much you have to pay for healthcare in an year before the health plan begins picking up a portion of the cost. Company with the health plan that had low deductible got more points. Source breadth of health plan. Health insurance company may offer up to 4 types of plan benefit design: PPO, HMO, EPO, and POS. We get company that offer more type of plan, more point sources, and metal tire offering. The ACA Marketplace has 4 metal tire level. We give points to companies and the offer more tire plan option. Best health insurance company for self-employed methodology. Find the best healthcare insurance company 2025. Oscar, Kinga, and Tana other health insurance company that we rated. Here are other health insurance company we analyze as a part of the your researcher. And now we talk about guide to self-employer health insurance. 3 ways to get self-employed health insurance. Whether you are freelance writer, Uber driver, door dasher, independent contractor, consultant, or otherwise self-employed, you will likely need to purchase your own wealth insurance unless you have covered by a suppose a parent, and your option for comprehensive coverage include enrolling in the ACA Marketplace and Cobra Medicaid. You are eligible. And how do I know which health insurance is the best fit for me? Freelance lifestyle and budget. There are several factors considered when comparing plan, including whether you are temporarily self-employed between job freelancing for the foreseeable future. Number one, the ACA Marketplace. If you are self-employed, you should know that the Affordable Care Act opened up new self-employed health insurance opportunity. Here are the key points to know: essential health benefit and subside available. You can get income-based premium tax credit to lower your monthly premium if you are eligible and enroll through to ACA Marketplace in your state. Depending on where you live, you might also be eligible for state funding subside. In addition to the ACA federal subside, no medical underwriting. Your medical history won't affect your eligibility, coverage, or premium. Enrollment period. You can sign up during the annual open enrollment, and although a proposed future rule change call for the deadline to be the reset to December 5. Coverage under your spouse plan. If your spouse employer offer health insurance, you are likely eligible to be covered under that plan. Since almost all employer sponsored plan offer sponsor coverage, this option may provide a way to get coverage. Here's are what else you should know. Enrollment periods. You can enroll during the your spouse employer open enrollment period set by the employer, or a special enrollment period triggered by a qualifying life event. Special enrollment timing. If you lose coverage from your own employer, you have 30 days to join your spouse plan through a spouse enrollment period, half the time allowed for individual market plan. Cobra. If you are leaving a job where you have had group health insurance and the plan is subject to COBRA, you can extend your group coverage for up to 8 years, 36 months, depending on the circumstances and contribution are mini cobra depending on where you live. Cobra coverage cannot continue definitely, but it can be a good temporary solution if you are just testing the self-employment water or if you plan to transition to another type of coverage later on. Financial factor to consider: continuation of benefit. If you have already paid some of pocket medical cost for the year, electing cobra will continue your existing coverage and prevent those costs being the reset to $0 under a new plan. Higher cost, you will pay the full premium, which include the both your share and the portion and your employer used to cover plus a 2% administrative fee. The can result is a significant cost result. Read Medicaid. Low income freelancers might qualify for Medicaid, a joint federal and state program that provide access to free and low-cost health coverage for children and adults. Most states have expanded medical under ACA, making coverage available to adults under 65 with a household income up to 138% of the federal poverty level. And eligibility in most states, adults under 65 with household income up to 138 of the federal poverty level can qualify for Medicaid in 2025. That's the $21,597 for a single adult and enrollment. If you are eligible for Medicaid, you can apply anytime. Flexibility medical and the Medicaid can serve a temporary, a long-term solution depending on changes in your income. If your income increases in the future to a level that makes you eligible for Medicaid, loss of Medicaid will trigger a special enrollment period that will allow you to enroll in a private individual state recovery. If you are 55 or older, be aware of your state Medicaid state recovery rule as they could impact how your estate is handled after you die. Some states recap and alcohol that were incurred by Medicaid, while others limit it to only long term and the care cost health insurance through state organization. Depending on the type of work you do and where you live, you may find professional association or membership organization that will offer you access to health benefits or help to arrange your enrollment in a health insurance plan. But it's important to pay close attention to the detail of the coverage. Keep in mind types of coverage. Some association help member enroll in the ACA Marketplace plan, while others may offer non-ACA compliant options like short-term insurance or fixed indemnity plan. Association may also provide access to discount medical programs which are not health insurance. ACA protection: ensure you understand the coverage detail and whatever the plan offer. ACA consumer protection like essential health benefit or if premium subsidies are available. Short-term health insurance is not a substitute for ACA compliant major medical health coverage and is not adequate of self-employed health insurance solution. But if you need to bridge a short gap between other policies, here what to know: limited duration. Since September 2024, new short-term health insurance policy have been limited to initial term of 3 months and total duration of 4 months, including any renewal coverage limitation. These plans often have caps on benefit do not cover essential health benefit and usually exclude cover for pre-existing condition use case. They can be used for bringing up if you missed ACA open enrollment and don't qualify for a special enrollment period or need temporary coverage before your next enrollment period. But a policy effective in September 2024 or later will terminate no more than 4 months after it takes effect. So this is not a solution that can be used for full year coverage. And I hope you enjoy this video. Like and subscribe my channel, guys. Have a nice time. Goodbye.